Okay, so welcome to the final lecture in the smart money concept section, and in this one we're going to be looking at the power of three structure, which you can see on your screen right here. And this is a structure that I often look for, especially on higher time frames, and is a very good indication of catching, a continuation in the trend quite early. Okay, so what we're looking at here is three different parts of a movement in price. Okay, and the first section, which you want to identify initially, and it's quite obvious due to you'll see quite an obvious consolidation pattern without any real structural shifts, like any you won't really be able to identify a clear structure. You're not going to be able to see your higher highs, you're not going to be able to see your higher lows. Okay, you're not going to be getting those key structural shifts that you look for in a trend. This is your consolidation period, and this is the first part of the power of three process. And the idea is that in this position here, this is where smarter money will be accumulating a position for either direction. Okay, so in this example we're looking at here, price moves to the downside. So what we'd expect here is smart money is using this consolidation to sell or to build up a short position. Okay, after this consolidation / accumulation level, okay, so smart money is accumulating a position here, and in this case heading for the downside. What you get after this is the second stage in the power of three structure, and this is your manipulation. Okay, and what we mean by the manipulation is just a move outside of the consolidation that we've been in for a while that induces retail participants to take a trade. Okay, this manipulation, it makes people want to react. And why do I say that? Well, what we can see here is we have a fairly clear resistance level up here, as we can see, in this little pocket right here, fairly clear resistance, and we can see we break above it, and we're printing a higher high, a very clear higher high. Okay, and this is going to make retail participants want to get long exposure. Okay, not only that, but it is also going to trigger the stop losses that novice traders are placing right above the highs. So this will hit the stop losses and will liquidate some traders. So in both of these instances, it creates buy orders. Okay, when the short stop losses, that will be resting here. So the people who got short in this area here, they might put their stop losses above these highs. Okay, and then these stop losses get hit. This triggers a buy order into the market. Okay, this alongside the people who are actually buying, expecting it to go up here, this creates a nice little pocket of liquidity. Okay, so right here is where we have liquidity, and this liquidity is exactly what a larger participant in the market wants to see. Okay, because liquidity allows them to get into their positions. Okay, so price is manipulated to the upside. You get a small pop, taking out the shorts over here, making sure that longs are getting involved, and then you send it on for the third leg of the power of three structure, and this is your expansion. Okay, and the expansion is basically where the trend continuation occurs. And you've had your consolidation, so the smart money has entered their position. You've had the manipulation for the final injection of liquidity to fill out the positions, and quickly trigger a reversal to the downside here. And this is where you're going to get your expansion. So this is the move that the smart money is profiting off. They'll buy back lower over here, and they'll close their shorts out along the way, of course. And that is it. That's the basis of this structure: consolidation, manipulation, expansion. It happens on multiple time frames, and it's definitely one to look for. Okay, and here's another quick example here. As we can see, we're on a much lower time frame now. We're now on the 1 hour time frame, and what we can see is a very, very similar pattern playing out. Trading it in real time can be much more difficult than just picking up on it and being able to enter positions. You can see, you get lots of, especially in Bitcoin, Bitcoin is quite liquid compared to your traditional assets, and while that does pose us some advantages, it can also make it harder occasionally to get entries, like you see these large candles here, which would have chopped a lot of traders out on both sides. But what we see yet again, okay, it's your 1, your 2, your 3, consolidation, accumulation, manipulation to the upside, stopping out the retail shorts and inducing longs, and then sending it back down for continuation of the trend, allowing smart money to get in a position and get out of position at the downside. Okay, this pattern happens again and again. Liquidity fuels the market. That's a thesis I use quite a lot in the server. Okay, it's definitely a motto I trade by. The market basically moves towards liquidity, and we use all these two tools that I've been teaching you throughout this course to basically assess where we think the liquidity could be, and hopefully try and place ourselves into an advantageous spot to take advantage of that. Okay, so yeah, if the lower time frames you go, you're still going to see this, and it does tie in quite nicely with our other smart money concepts. Okay, essentially all the manipulation is a liquidity sweep. Okay, a bit more of an exaggerated liquidity sweep, and it does tend to play out over a longer period of time. Okay, but the best way of trading these generally is if you do see a consolidation phase, you see a manipulation. If you end up closing back inside the consolidation, okay, so the consolidation is, this period here. As soon as price attempts to break out, it traps longs up here. When price starts coming back down, these guys are going to start getting worried. They're thinking they're expecting the breakout to happen, but we've returned back inside the range, and this, can be a bit more of the trigger for a further move to the downside, which is what often happens, and why this pattern works so successfully. Okay, so definitely one to keep an eye out for. As I said, it's very helpful for catching higher time frame moves, but can also be used occasionally on the lower time frames to try and pick up some nice scalp trades.